Hi, this is Elliot Eisenberg catching you up to date on what's going on in economics. And while GDP data has looked a little bit weak of late, Q1 was 3.1% or so, Q2 was 2, and Q3 1.9. Despite the decline in GDP, things are actually improving. Consumer sentiments turned around, is improving a little bit. Small business sentiments improving. Manufacturing, which has been in a mild recession, is still in recession, but less of a recession. Things are getting back to neutral. This is all really good news. And most importantly for us, the yield curve is now positive. That's really important. The negative yield curve gave us all feelings of concern that there was going to be a recession, and that was really bad. And while low rates are good for housing and now the rates are higher, that's better for housing because it's a good economy. And that's much more important for housing than a bad economy is, right? And part of the reason for this has been the reduction in interest rates by the Fed. The Fed cut rates 3 times in their last 3 meetings over the last 3 months or so, 4 months or so, whatever it's been, right? And they cut rates during that time. Their concern was they didn't want to see things they were concerned things were going to get worse. So even if GDP was essentially flat, which it's been in Q2 and Q3, right? Went from 2 to 1.9, an indistinguishable decline in GDP. They were cutting rates because if it was flat, they were going to cut rates. Now, because things are better, it has to get much worse before they raise rates. They're now saying, look, things have to materially deteriorate before we cut rates. Look, Brexit may well get resolved better. Europe's looking a little stronger. U.S. households spending is really good because unemployment is really low and job growth is really good, right? So the chances of a recession in the next 12 months have materially declined. They've declined from roughly 35% to say 30%. And while that doesn't seem like a lot, the direction's good and it really is meaningful. I continue to not be on recession watch. That's it for now. See you next month.